Peter Schiff, the economist who nailed the 2008 crash, is back with a terrifying prediction. A financial crisis so brutal it will make 2008 look like a walk in the park. Inflation's running wild, the dollar's on shaky ground, and the Fed's panicking. But Schiff has a plan. In this video, he'll expose the cracks in the system, shatter the myths about safe havens like Bitcoin, and reveal the shocking investment strategies the elites are using to protect their wealth. Is this all doom and gloom? Not if you know where to put your money. Let's discover how to survive the coming storm and emerge stronger than ever before. Chapter number 1, The Perfect Storm. The year is 2024 and the financial markets are a whirlwind of uncertainty. Just a few years ago, the world was still reeling from the aftershocks of the 2020 pandemic. Now, a new storm is brewing on the horizon and it threatens to be even more devastating. Enter Peter Schiff, the economist who famously predicted the 2008 housing market collapse. Schiff has been sounding the alarm for years, warning about the reckless government spending and loose monetary policies that have fueled an unsustainable economic bubble. Once Schiff says, "For over a decade, I've been telling anyone who would listen that this day would come." We have seen the national debt balloon to a staggering $30 trillion, a number so high it's almost incomprehensible. The Federal Reserve has been printing money at an unprecedented rate, flooding the market with trillions of dollars in quantitative easing. This reckless money creation is a direct consequence, inflation. And right now, inflation is at a 40-year high, according to the Bureau of Labor Statistics. In May 2024, consumer prices rose by a staggering 8.6% year-over-year. That means the groceries you bought last year for $100 now cost you $108.6. This isn't just a minor inconvenience, it's a stealth tax that erodes the purchasing power of your hard-earned savings. Schiff isn't alone in his concerns. Many financial experts are warning about the dangers of this perfect storm. Runaway inflation, a weakening dollar, and a Federal Reserve caught between a rock and a hard place. With interest rates already near historic lows, the Fed has limited tools to combat inflation without triggering a recession. Chapter number 2, The Fallacy of Safe Havens. When economic storms roll in, investors instinctively seek safe harbors for their hard-earned money. But in this chapter, Peter Schiff throws cold water on some commonly held beliefs about these so-called safe havens. First up, the digital darling, Bitcoin. Championed by many as a revolutionary currency and a hedge against inflation, Schiff argues it's more akin to a speculative bubble fueled by hype. Unlike gold, with its tangible properties and historical track record, Bitcoin lacks intrinsic value. Its price, currently hovering around $30,000 as of June 16, 2024, has experienced dramatic swings, even surpassing $60,000 in November 2021. Schiff warns that when the coming crisis hits, Bitcoin could plummet alongside other risky assets. But Bitcoin isn't the only safe haven under Schiff's microscope. He also takes aim at traditional stock market investments. While a diversified portfolio of stocks can be a sound strategy during stable times, the current market, inflated by years of low interest rates and quantitative easing, presents a different scenario. A potential correction could see many stocks lose significant value. And for those considering bonds as a safe bet, Schiff warns of their vulnerability in an inflationary environment. Bonds offer a fixed interest rate, but with inflation eating away at purchasing power, that fixed rate becomes less valuable over time. For example, a bond with a 5% interest rate might seem attractive, but if inflation is running at 7%, you're actually losing money in real terms. Chapter number 3, The Schiff Survival Strategy. Alright, the good part. Schiff's unveiled his survival strategy for the coming financial storm. But before he dives in, let's get some perspective. According to a recent Harvard Business Review study, over 80% of individual investors lose money during market downturns. That's a scary statistic. But with the right approach, you can be part of the 20% who not only weather the storm, but potentially come out stronger. According to Schiff, the key, folks, is to invest in assets that retain their value when inflation goes haywire. These are assets with real tangible worth, not just a speculative price tag. Let's break down some options. First up, gold. It's a cliche for a reason. Gold has been a safe haven for centuries. In fact, according to the World Gold Council, the price of gold has increased by an average of 10% per year over the past 20 years. That's a pretty compelling track record. Consider investing in physical gold bullion, coins, or even gold ETFs, which are exchange-traded funds that track the price of gold. Next, diversify with hard assets. Think real estate, land, and even certain collectibles. Real estate, for example, can provide rental income while also appreciating in value over time. Commodities like oil and agricultural products tend to rise in price during inflation as demand outpaces supply. Even certain collectibles like rare artwork or classic cars can be a good hedge against inflation. The key here is diversification. Don't put all your eggs in one basket. Don't forget about dividend-paying stocks. These are companies with a history of paying out a portion of their profits to shareholders. Even during economic downturns, these companies may continue to pay dividends, providing you with a steady stream of income. Focus on established companies with strong financials and a history of consistent dividend payouts. Chapter number 4: The Elite's Secret Weapon. Schiff doesn't stop at just recommending assets, he dives into a surprising truth: the investment strategies the wealthy use to not just survive, but thrive during economic turmoil. For decades, the financial elite have relied on a little-known secret weapon: real estate investment trusts, or REITs. These are companies that own and operate income-producing real estate such as apartments, office buildings, and shopping centers. Here's why REITs are so powerful. Inflation hedge. REITs typically own properties with rent escalators, meaning rents increase automatically based on inflation. This protects your investment from losing purchasing power. Diversification. REITs offer exposure to a variety of real estate sectors, spreading your risk and mitigating losses. Passive income. Most REITs distribute a portion of their rental income to shareholders as dividends. This provides a steady stream of income regardless of market fluctuations. Schiff points out a fascinating fact. While the average investor chases stocks and bonds, the wealthy are quietly accumulating wealth through REITs. This isn't just about owning a piece of property, it's about owning a diversified portfolio of income-generating assets that perform well during economic downturns. But there's a catch. Not all REITs are created equal. Schiff emphasizes the importance of investing in well-managed REITs with a strong track record and a focus on quality properties. He provides resources for viewers to learn more about REITs and how to select the right ones for their portfolios. Chapter number 5: A Glimpse of Hope. The coming storm might seem daunting, but Peter Schiff isn't all about doom and gloom. He believes there's a silver lining for those who prepare. Did you know a 2021 study by the Federal Reserve Bank of St. Louis found that gold has historically maintained its purchasing power over long periods, even during inflationary times? Here's how Schiff believes a well-positioned portfolio can benefit. Protection from inflation. By investing in assets like gold and real estate, your wealth is shielded from the eroding effects of inflation. Imagine your savings maintaining their value while others lose buying power. Profit potential. During economic downturns, savvy investors can find bargain opportunities in undervalued assets. Schiff emphasizes thorough research and a long-term perspective to capitalize on these situations. Peace of mind. Knowing you have a secure financial foundation creates a sense of calm amidst the chaos. You'll be able to weather the storm with confidence, knowing your investments are working for you. Don't be left unprepared. Subscribe to this channel for more insights from Peter Schiff and in-depth discussions on navigating the coming economic landscape. Together, let's build a brighter financial future.